What's up, good people? Welcome back to the channel. Today we are talking about something that can save you thousands, literally thousands of dollars when selling your home. The Section 121 exclusion. This tax play is found in Section 121 of the U.S. Tax Code. So what is it? What are the qualifications? How do taxpayers benefit from it? Let's dive in. First, let's explain what Section 121 of the U.S. Tax Code actually does. The Section 121 exclusion allows you to exclude from your income up to $250,000 of capital gains from the sale of your primary residence if you're a single filer, and up to $500,000 if you're married filing jointly. Basically, when you sell your home, the profit you make, or the capital gain, is typically taxed. But with this exclusion, a huge chunk of that gain can go untaxed, provided you meet certain conditions. To qualify for the Section 121 exclusion, to be able to exclude up to $250,000 for a single filer or $500,000 for married filing jointly, of capital gains from the sale of your primary residence, you must meet the following two tests. 1. Ownership test. You must have owned the home for at least 2 years during the 5-year period immediately before the sale. 2. Use test. You must have used the home as your primary residence for at least 2 years during the same 5-year period. The 2 years don't need to be consecutive. Also, the Section 121 exclusion can only be used once every 2 years. You cannot claim the exclusion if you have already used it within the last 2 years for another home sale. Before you try this tax play, make sure you talk to your tax professional for confirmation that you qualify and that there are no other issues you may have encountered that could possibly disqualify you from using this exclusion. Here are 5 ways this exclusion can work in your favor. 1. Maximizing your gains. If your home's value has skyrocketed, the Section 121 exclusion means you don't have to pay taxes on that increase. Up to $250,000 or $500,000 depending on your filing status. Think of it as free money when you sell your home, because it is. 2. No need to reinvest immediately. With this exclusion, you don't have to rush to buy another home to get the tax break, like you would have with some other tax laws. This gives you the flexibility to wait, explore your options, or even rent for a while. 3. Frequent use, or running this tax play every 2 years. You can use the Section 121 exclusion every 2 years. So if you're someone who moves or upgrades homes often, you could be saving on a bunch of taxes each time. Yup, that's right. I know what you're thinking. As long as you meet the ownership test and use test, you can run this tax play many times and the gain is tax-free, unless the tax law changes. But remember, keep in mind what I said earlier about consulting your tax pro to make sure there is nothing that could possibly disqualify you. 4. Partial exclusion for unforeseen circumstances. Did life throw you a curveball? If you sell your home before living there for the full 2 years, you might still qualify for a partial exclusion if the sale is due to unforeseen events like job changes, health issues, or other hardships. The IRS provides some leniency in these cases. Consult your tax professional if you fall in this category. 5. It works even for improvements made to your home. If you've made major renovations to your home, Section 121 could help offset any gains from the appreciation in value. The exclusion applies to the entire sale price, including the added value from improvements, which helps you avoid a tax hit for increasing your home's worth. Now let's look at a real-world example. Imagine a couple named Amina and Jamal. They bought their home for $300,000 8 years ago, and the market has been good to them. When they sell it for $800,000, they walk away with a $500,000 gain. Normally, that profit would be taxed as capital gains. But because Amina and Jamal qualify for the Section 121 exclusion, they get to exclude the entire $500,000 in gains from taxation. That's right, they don't owe a dime in taxes on their profit. So, there you have it. The Section 121 exclusion can be a powerful tool to save you money when you sell your home. And you don't even need a business. If you're thinking of selling soon or just curious about tax strategies, you now know what to look for. Don't forget, Tax laws can be tricky, so consult with a tax professional to make sure you qualify and get the most out of this tax play. Hold up, hold up. Don't go anywhere yet. Come on, y'all, don't do me like that. If you found this video helpful, make sure to hit that like button and subscribe for more tax tips. Also, drop a comment below and share this with someone. All right, now you can go. Thank you for watching, and I will see you soon.